If you don't hold it, you don't own it. Even Pimco cuts payouts as much as 45% on muni closed-end fund shares. This is in the US, by the way. So if you're counting on this income, muni closed-end funds borrow in the floating rate tax-exempt market to finance the purchases of higher-yielding long-term bonds seeking to profit from the difference. So what that is a maturity mismatch. And when everything's going fine, you don't notice that. You can get your money out, no big deal. But when things don't go fine, they just say, boom, nope, can't have it. Well, how can they do that? Because it's not illegal. When you make that deposit, it's theirs. It's not yours anymore. You're paying for the risk. You're paying them to manage this, but make no mistake about it. You have actually given them, loaned them that money. It's not yours. Nobody went to jail in 2008 because it is not illegal what they did. Pimco cut monthly payouts on nine municipal bond closed-end funds as much as 45% after a sharp jump in short-term rates increased borrowing costs. So when they just had those interest rates and the Fed said we're going to keep them low for a really long time, which they did, then they could create all these new funny products and benefit from them. But when that turns, who's really the one that ends up holding the bag? It's you. So you don't own it. You're paying for it. You're taking all the risk. Does that seem like a good deal to you? Invesco, BlackRock, Nuveen, and Eaton Vance all cut distributions on their muni closed-end funds last year. And a lot of people think that municipal bonds are so darn safe. Yeah, well, it depends on the kind of municipal bond it is, if it's a revenue or a general obligation bond, but not so safe. And when they're put in these funds and then they do all of this financial engineering with them, it risks not just your income, but, oh, by the way, let's talk about that for just a second, because what are you getting paid on these? 3%, 4%? So you're going to risk 3 or 4%. You're going to generate maybe 3 or 4% or even 5% of income, but you're risking your entire principal. And if you lose your principal, how are you going to generate income from that? If you like this clip and you want to watch the full video, just click right here. And to subscribe, click right here.